Okay, we're live. We are indeed live. Interesting. Let's see. Okay, Max saying it's working.
Link is shared
are
everywhere.
Getting shared. Okay, cool. I guess we're waiting for Max before we start.
No problem.
Yeah, I got the screen up already for everybody just joining us in the meantime, but yeah. Okay.
I can start with the screen share on my end.
Sure. Let's see. Is that oh no, that's just you presenting. Okay. Okay. Let's see where Max is so that we can begin. Actually, I'm sure he's going to join us soon either way. So I think we can already start. Let me just start recording on OBS. Turn off all of these windows that I have that are irrelevant right now, but will become relevant later. Okay. And I'll switch to day mode. Okay, we're live. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, welcome. This is a weekly panel call where the Santiment team and sometimes community members discuss recent crypto market events, but we don't do it from just a pure price-based perspective. We take a look at a variety of different sources of information to make an educated guess of what's going on in the market, including on-chain data, social media data, development activity data, and yes, partially pricing data, trading volume, and things like that. But basically, over the course of the next 45 minutes, we are going to talk about a litany of topics, including Bitcoin, Ethereum, and several altcoins over the last week and what's been going on with them. But we'll all do it from a perspective of a behavioral analysis approach, including a variety of sources. So if you haven't used Santiment before, we have developed dozens of tools and custom metrics, including on-chain, social media, and development indicators for over 900 different cryptocurrencies. So I strongly suggest, if you like anything that you hear at all today during the call, to check out santiment.net. And join our Discord as well, because if you don't really want to wait until next Friday for us to kind of cover some of the topics that you might be interested in, we talk about things like this pretty much on a daily basis on our Discord as well. We are also near the end of the call going to address a few questions that we have received from our Sandbase Pro members. So basically, anyone that is currently subscribed to a Sandbase Pro plan has the ability to ask us questions that they would like us to cover during this or upcoming calls. So today, I think one of the questions was about Chainlink and its sort of several spikes that we've seen in Chainlink's on-chain activity over the last couple of months. So we are going to try and dig into those a little bit, as well as generally talk about where Chainlink is right now and what might happen with it over the next couple of days to weeks. So before all that, we are as usual going to start with Brian showing us a few of our templates and what they are saying about the current state of the market. So Brian, I think you're already sharing your screen. Feel free to start anytime that you'd like.
You bet. Thanks, Dino. And I just want to give everyone a thank you for whoever joined us on our webinar earlier this week. It really was a pleasure having you and kicking off our second one with a pretty big topic of top holders, which we'll get into briefly today as well.
By the way, you're kind of static a little bit. I don't know what it
am I?
is. Yeah, just a bit. Yeah, Max is
Let
saying
me,
something is wrong with your microphone as well.
any better now?
No, not really. You kind of sound like Terminator.
I'm going to leave and come back. So
Okay.
maybe kick it off with a metric on your end and I'll come right back and see if I can resolve it.
Sure thing.
Now you already sound like Terminator. He's coming back.
Yeah, he's I'll be back. Okay. In the meantime, I mean, one of the things that we are definitely going to talk about today is how we made this. We wrote an article, or I wrote an article a few days ago while Bitcoin was still kind of declining into, I think, 8,500 level almost, where I said, you know, there's a number of on-chain and social indicators that might be moving into bullish territory. And since then, you know, Bitcoin has sprung from 8.6K to 9.4K right now. So we were pretty much on the money with this particular insight. I urge everybody on this call to read it during or after the call. It's very long and it's very well researched. It features a number of our on-chain and social metrics. If you like a long read that makes a number of good points based on solid hard data, this is the type of article that you are going to enjoy. But some of the things that we are going to talk about during the call today is really why we thought that Bitcoin is poised for a breakout, and also where we think Bitcoin might be going in the next week or so, because I didn't really see anything change in any of the indicators that I talked about in this article, which was 2.5 days ago. Even though, you know, the price of Bitcoin is rising and going up at the moment, all of these indicators still hold water. So I would not be too surprised to see another breakout, maybe even a push above, well, I don't know, 10K, but maybe 9.8K in the next couple of days. We'll see. But before I really delve deep into this, because it's going to take like 10 or 15 minutes to really explain all of this, we might want to wait for Brian to see if he can figure out what's been going with his mic as well. Let's see. Okay. All right. Anyway, I'll just start with our Bitcoin case then. And so 2 days ago, I wrote an article saying a number of Bitcoin's on-chain and social indicators may slowly be moving into bullish territory. So one of the indicators that we have recently added to our list on same data particularly is this one that shows the number of holders by the number of owned coins. Essentially what, in this case, we're looking at data for Bitcoin. Essentially what this chart is showing you is it shows how many addresses hold more than X amount of coins. And I can actually show you this chart live as well.
Hey, Dino, I just came back and I'm not seeing your screen.
Oh, I think that's, okay, well.
Also, is my audio okay right now?
Yeah, your audio is okay, but you're not showing it, seeing my screen, but I think the stream is, because, yeah, I'm not presenting, but the stream is seeing it. Are you okay now? Cool. You're back? Everything good?
Yep, everything's fine. I just want to let you know that I came back and no screen share was on, but if they're seeing it, we're good.
Yeah, I'll just start sharing it now. I went into my insight for Bitcoin, so let's open with that, and then maybe we can go back to some of your templates as well, right?
Cool.
Okay. Max, do you have the link to this particular chart near you? I know that it's currently a private dashboard. Let me try and I think I shared it with you in Discord, Max. If you can share it here in the chat, would be nice.
You mean this
This
particular?
particular one, yeah.
Or made on Sunbase?
On Sand Data. Yeah, this one that shows more than X coins. I shared it a few days ago with you in Discord in a DM. So just scroll a bit up and you'll find it.
Okay, and what do you want from this?
I just shared it in the chat here in the call, so that I can open it. But anyway, while
You mean
Max, yeah,
you want the link or the screenshot?
yeah, the link to the live chart. I shared it in a DM a few days ago, so I just don't have it near me at the moment.
I think this is the one.
Mm-hmm.
Right. Yeah. I shared it on our chat here. See it?
Yes, that's the one.
This is the one.
There we go. Okay. We're in business. All right. So yeah, as you can see, this is still private, but if you want access to it, you can ask us, and we'll be able, we'll be happy to share this link. It's going to go live onto the platform as well in the next couple of days, so no worries there. But one of the new metrics that we have added is, as I mentioned, the total number of addresses by the amount of how many coins they are holding, or holding more than X amount of coins. So this is the chart that I was looking at, and I was particularly looking at the Bitcoin's holdings, number of addresses holding more than 100 Bitcoin over the last 6 months, basically almost year to date. So the first thing that we noticed while Max and I were talking about a few days ago is this strong rise in the amount of basically very big addresses, so people holding millions of Bitcoin. It's also interesting and notable, how these addresses behaved in the past couple of months. So the first thing to notice is this big spike here, right? During the Black Thursday event, while a lot of people, I think, were dumping their Bitcoin bags, these guys were actually accumulating. This is a spike of 400 new addresses in the span of a couple of days. I think it was 5 days into the Black Thursday dump. More than 400 new addresses sprung up, holding more than 100 Bitcoin. So even though the market was collapsing, the big guys were very much confident into Bitcoin's bounce back potential. So this is the first kind of interesting thing to note, and then you can basically see what happened soon thereafter. The second interesting thing to note is this sort of a smaller accumulation period here into the spike, obviously the halvening pump. But as you can see, the big guys, the 100 plus BTC clubs, started dumping their bags a little bit before the correction. So it's, I think, fairly clear to me that these guys can have a pretty strong impact on the market. Seeing how their behavior over the last couple of months has impacted the price of Bitcoin, at least short term. So it was at least interesting to see the number of addresses holding this massive amount of Bitcoin start rising again. So it went from 15.9 thousand here on May 17th to 15.991 thousand here. So this is 800 new addresses in the last, I think it was now like 8 or 9 days. Pretty strong trend reversal if you look at the last month's worth of data, which is the first thing to kind of tell me that it seems like Bitcoin whales are once again starting to buy into the dump, like they did here as well before the rally. So this was the first sort of indicator that at least among the big guys, this sort of drop below, what was it, 8.9k, 8.8k, really wasn't anything concerning to them whatsoever. And since then, we've gone upward. So this was the first step. Let me update the chart a bit. Yeah. Okay. Can I look at? Okay. So this is the last day, I think, is bugged. So ignore this Yeah, I wanted to see if 29. So let's look at it until here. Yeah, still, it was actually, it dumped a little bit or dropped a little bit, but overall, the amount of addresses remains fairly strong, although the accumulation period seems to have stopped and now is into small consolidation here. So this was indicator number one, that there's a strong shift in the behavior of big guys. The second indicator that I was very interested in is the MVRV long short difference. So for those of you unfamiliar with this article, with this indicator, I suggest reading the article here that explains it into much more detail. But the general gist of it is that the MVRV long short difference tries to look at the difference or the divergence between the average profit or loss of long-term Bitcoin holders on the one hand, and the average profit or loss of short-term Bitcoin holders on the other hand. So when this difference between the long-term and short-term holders crosses 0%, or when it has done so in the past, what this indicates is that on average, long-term holders are now at a higher profit margin than short-term holders. And in the past, it's only been 4 times in Bitcoin's history that the MVRV long-short difference has crossed the 0% mark. Once it happened in 2012, before the 2012 to 2013 rally. The second time it happened was in 2015, before the massive, Bitcoin rally. The third time it happened was actually here in the I think May of 2019, and we actually wrote about it right as it was happening here. We wrote, I think I even linked to it in this article. Let's see. No, I didn't. But if you go to our insights, you'll find an article explaining how we wrote about it. Oh, for the third time in Bitcoin's history, this MVRV long short indicator was crossing 0%. When it crossed, the price of Bitcoin was 5.9K. In the next week, it was about 8.5K, and in the next 45 days, Bitcoin was up to 13,000. So historically, this indicator has proven fairly accurate at predicting bullish breakouts for the biggest coin on the market. The last time it happened was here, and you can see that it kind of proved to be underwhelming. The reason for this is that this was February of 2020, right before the coronavirus dump. So we don't really know, or we will never know, what could have happened with the price of Bitcoin had there not be basically a global financial meltdown. But even here, like I can show this chart live, you'll see that the price of Bitcoin actually started rising once again in this fourth breakout above 0%. So if we look at MVRV long short difference, so this is the last time it broke 0%. This was February 6, 2020. So Bitcoin was at 9.6%, and so it started rising to 10.3, 10.3K, I think it was at the highest. And then, the coronavirus kind of messed with the price of Bitcoin quite a bit. Now, what I was seeing just recently is the very strong push upward for the MVRV long short difference once again. So if you look at the long-term trends, we are once again seeing a boom from almost minus 20% to start the month of May to now only minus 1.7%. So this is once again indicating that long-term holders are on average starting to be at a higher profit loss margin compared to short-term Bitcoin holders, which has in the past proved to be a very opportune time to accumulate on Bitcoin. Now, obviously, I'm not saying that this is going to be exactly the case, nor am I saying that we are going to see the breakout above 0%. But so far, the chart has been trending upward and the slope has been slightly declining here. But if we see the rise above 0% in terms of the MVRV's long-short difference, and if all of the other indicators that I noted in this article kind of remain the same, it wouldn't be surprising to see sort of a short-term bullish breakout for Bitcoin once again. So this was article or indicator number 2 that I covered, and I just briefly want to show the third indicator that I mentioned, which was Bitcoin's social sentiment. So everybody that has used Santiment before probably knows that we don't really only focus on on-chain data. We also have a massive data set of social media metrics and social media data. So currently we track over 1,000 crypto-specific social media channels, and this includes, Telegram groups, Twitter, crypto subreddits, all of the major Discord channels, a variety of different social media channels where the main topic of discussion are cryptocurrencies. So one of the things that I noticed recently, especially with Bitcoin's sentiment on Twitter, is that it was now kind of breaching the average or neutral territory and going into on average, bearish territory. So the chart that you're seeing here is live on graphs.sentiment.net/social, and everyone with a Sandbase Pro subscription can access it. So I will just show it to you live. If we look at Bitcoin's sentiment on Twitter, and we select the last year of data just to kind of reference a longer trend. The last metric on this list is called sentiment volume consumed. Essentially what it means is our algorithm tries to collect all of the messages that we gather on a daily basis. That's about 100,000 messages from all of these channels, and it labels them as much as it can as either positive or negative towards a certain coin. So here we selected Bitcoin as a coin, and the source of information is Twitter. I think Twitter is usually the most reliable source of information because our sentiment algorithm was trained on Twitter's data. So it was fairly interesting to see, over the last maybe a week or so, actually 10 days, the Twitter-related sentiment towards Bitcoin tanked heavily. So the 0% or zero line essentially means that the average sentiment towards Bitcoin is ambivalent or neutral. These extreme spikes in either direction mean that the sentiment is either overwhelmingly bullish on a specific channel, or here it has been overwhelmingly bearish. So over the last 10 days, the mood has shifted massively essentially since the halvening here, May 13th, 12th, yep. It has gone from overwhelmingly bullish towards Bitcoin to a very strong sort of bearish reversal. Now, some people might think that this is fairly bad for the price of Bitcoin, but in this article, I argued the exact opposite, because we have seen time and time again that Bitcoin's price rallies did not start from a very bullish territory. Like if you look at the price rallies or the 2019 tops for Bitcoin, both of them kind of correlated with a very bullish sentiment, and it was the same thing here with the halving pump. It was a very strong bullish sentiment that kind of drove the price down. In fact, when you look at Bitcoin's sentiment over the last year or so, all of its price rallies started from a predominantly bearish atmosphere. So you can see it here in July of 2019. Same thing here in August, September, November. All of these rallies started from a predominantly bearish atmosphere and mood. Even the latest, essentially, the post Black Thursday pump started from a severely, bearish overtones. So the fact that, once again, on average, the crowd is moving from a very sort of FOMO mood to a more serene, sometimes even skeptical mood about Bitcoin can often be a fairly strong signal and positive signal for the short-term price for Bitcoin. Now, this is not to say that Bitcoin is bound to bounce back, especially because these levels are still fairly timid compared to the bearish sentiment historically. I would expect to see a stronger dip in the Bitcoin's Twitter sentiment, maybe to minus 0.5 level, rather than where it is now, which is at like minus 0.1 or something. Yeah, there we go, minus 0.1. So I would expect a stronger decline in relative or average Bitcoin sentiment on social media channels before I really think that we are, due for a strong bounce back and even maybe a push above 10K. Will that happen, especially now that we're seeing once again the Bitcoin's short-term rally? I'm not sure, but if we see this chart go down to minus 0.05 or so, basically meaning that the sentiment towards Bitcoin is becoming very bearish, we might see a strong positive action for its price as well. So these are.
Hey, Dino.
Yeah, go ahead.
You may also want to show the contrast to Ethereum after you make this point about Bitcoin sentiment volume consumed on that article,
Okay,
because it's a lot different.
let's see what's been going on with Ethereum.
Very, very different story.
Oh, there you go. Yeah. So as far as Ethereum is concerned, the crowd is loving it. And this is not necessarily a great sign. Like if you look at Ethereum's tops over the last year as well, very bullish sentiment, leading to a correction, bullish sentiment leading to a correction, bullish sentiment leading to a correction, and once again a bullish sentiment leading to a correction. So here it was actually declining fairly quickly before we saw this push above 200. So now we are at fairly strong bullish levels for Ethereum, at least on Twitter. Which is not necessarily great for the coin, right? If you look at its, the bounce back times, it once again started from very bearish atmospheres historically. Yeah, good point, Brian. So for
Yeah,
Ethereum, we're seeing a very strong, very different picture overall.
I think we're sitting just over 1 for Ethereum, and historically, just as Dino just pointed out, when we hit that mark, it generally is very quickly followed by a local top and a short to midterm correction.
Yeah. Okay, well, something to keep in mind, guys, if you're interested or vested in Ethereum, that its sentiment, social sentiment data is showing a very bullish sentiment, and generally, historically, hasn't really been the best friend of Ethereum. But anyway, I also talk a little bit about Bitcoin's price and daily active address divergence, which is a custom template that we have developed, but I'm not going to go over it here. If you're interested, I suggest checking out insights.santiment.net and reading my full article. So these are some of the indicators that we kind of went over before Bitcoin started breaking out. And so far, it's proven fairly effective. So I'm going to stop presenting now, Brian, and I'll let you go into your templates because I know that there's some additional data about Bitcoin that you wanted to go over. So go ahead and present now.
You got it. All right. So we're going to kick it off with a quick update on NVT. For those of you who don't know, NVT is essentially a measurement of how token circulation is looking at any given time compared to the current market cap. So token circulation in this definition would be the amount of unique tokens being transacted on a blockchain on a given day. So unique tokens in this case would be a way of measuring the amount of circulation happening, transactions happening, without double counting or accounting for things like wash trading. And in general, we find it to be the most accurate measurement of the health of a network as far as seeing what the amount of transactions on a network are at a given time. So right now, what we're looking at is a table that I have that measures, using a little algorithm, which NVTs have been the most healthy over the past 10 days. And leading that charge is REN, which I'm going to show off before I get into Bitcoin and Ethereum. REN here is essentially moving up over the past couple of months since Black Thursday. Just like most other altcoins, it's rebounded nicely. And in April, it sort of gave us a neutral bar here, but it went back to bullish after these past 7 to 10 days just being extremely high on the token circulation measurement scale. And especially over the past 1 day and 2 days, we've just seen an explosion in token circulation. And if we look at it on stand data, you can see that right around the 17th, 18th or so, that's when things started to pick up. You saw a huge spike. We'll even zoom out to about 90 days just so you can see the context. So yeah, basically all of April, this is why we had a neutral signal. It was pretty low. Token circulation was not that special, but price was rising. Now price is continuing to rise, but the amount of transactions happening on the network now have just exploded, particularly yesterday and the day before. It looks like the 27th, 28th here. That's when things just started to go really crazy. And remember that the red here is token circulation, blue is transaction volume. And going back to this chart, that's why these hash marks are so low. So these trend lines here are the averages that this model anticipates token circulation to be in order to be neutral. That's why this yellow one fell right in the middle. All the hash marks are well below. And for the overall month, I'm getting a little feedback. I think Dino, if you can unmute or mute, that is.
Yeah.
Okay. So yeah, basically we're looking at a very, very bullish trend now for Ren. And that's very important to note because in a second, I'm also going to go over their top holders metrics. Going back to this chart, you'll notice Bitcoin and Ethereum are actually toward the bottom. And that doesn't mean that they're bearish by any means, because as long as they're showing negative values like Bitcoin is, that's a sign that it's still under the expected trend line. And it's just barely on the bullish end right now over the past 10 days. But most of these leaders are dominated by altcoins other than Ethereum, which, just as we saw with the sentiment showing, there seems to be a bit of a bearish divergence and people are getting a bit overhyped based on the amount of transactions that are actually happening on Ethereum's network. But first off, just a quick glimpse at Bitcoin. We are still in semi-bullish territory after actually going to semi-bearish last month as we sort of overheated and went over 10,000 and then retracted back to about 8,600 at the close of the month. Now we're back up at 9,400 and we are getting enough token circulation. The past couple of days have more or less been neutral with where the month has been. So this could easily, sort of tick up to neutral over these final 2 to 3 days here of the month. But as far as token circulation goes, we're right where we should be, essentially, and just an edge better than where we should be. As for Ethereum, interesting story because the first half of May showed that we were getting a very healthy amount of token circulation, and we're actually getting a bullish bar after the past 2 months have been semi-bullish, shown in yellow-green here. But the past 10 days have not been good at all. We're actually, as we ticked up from 200 about 220 over the past few days, the token circulation is not kept up, and we aren't getting quite enough transactions on the blockchain to really justify the price pumping up the way it did. So if you're looking for a short-term profit take, this might be a good time to take out of Ethereum, put into Bitcoin or some other altcoin, perhaps Ren, because of the fact that Ren is going so haywire right now in a good way. Same with coins like Storage, OMG. I'll show you the chart really quick. Storage is just continuing to have bullish months. Basically every month since February, it's gotten better and better. Even as the price has risen, the token circulation has risen even more. And then OMG, of course, was inflated by the Coinbase Pro. So take it with the Coinbase Pro listing. So you got to take it with a bit of a grain of salt that this type of hype will eventually die down. But for now, it's still looking very bullish. So if anyone would like this model, more than happy to give it to them. As long as you're a Sandbase Pro member, just DM us in Discord and we'll hook you up. Now, moving on to top holders. Going to start off with our top 100 cumulative change. And two of these things are not like the other here. We really see that Ren, actually we announced this on our webinar a couple days ago. It was just starting to have some big spikes. And since that time, it's just continued to surge upward. This is measuring the amount of cumulative change that the top 100 holders have made in their bags for each respective project during this time. So Ren here has gone from about negative 0.7% from these past 30 days to a huge swing of 2.35% or so, 2.34, just over these past 3 days. So essentially what this is saying is our whales with the most holdings of Ren are really starting to make a push. And we can look here, it seemed to have been on exchange, but over the past couple days, this is Ren here in light green. it's actually been off exchange where we've seen a big explosion. So I think what happened is on exchange, there was a big push here from the 22nd to about the 25th to 26th. And then those same addresses move them off to their same holdings in their external wallets. So that's interesting. And then even more noteworthy is the fact that Ethereum's bag holders have just gone nuts. This is one of the biggest spikes I've really seen on this template since we've made it a couple months ago. We went from about negative 0.26 or so all the way to 2.07 in a single day. And that's pretty crazy. And I want to show it really quick on sand data because it supports what we're seeing on the template. Go ahead and go to top holders. Going to go to top 100. Balance in USD, make sure that's off, or else it's just going to show you what their balance is with the price reflected, which isn't quite as relevant. And then we're going to go to, yeah, we already have it on, so we can go to last 90 days. And this big uptick right here is pretty noteworthy because you don't normally see a big shift of this magnitude.
Brian, you can deselect the exchanges and it will be even stronger. Yeah, there you go. That's exactly how big it is. It's crazy.
There we go. So yeah, this will count the actual value, the amount of Ethereum that went into these top 100 holder wallets. And yesterday we were at 21.5. Now we're at 24.2. So that's basically in the last day, if I'm doing the math correctly, that's about 2.7 million Ethereum was added to these non-exchange wallets. And that's absolutely massive. Something to keep in mind, because obviously we just also noted 2 bearish signals for Ethereum, but this is showing that the whales are saying we don't care about what the sentiment is, we are going to keep on buying. And you know, we can go either way with Ethereum right now. I'm a little more confident in some other projects, but Ethereum has some definite good signals going for it as well, such as here. I'm also curious as to what it looks like just for the top 10. It's probably not, okay, so I take it back. It actually was massive, and this big swing happened within some of the top 10 wallets. It wasn't within the top 100. Just curious if it's like top 5. Yes, it was someone in the top 5. Was it the top 1? Oh, it just defaults back. So maybe it only goes to the top 5 here. Do you know if you can actually go to see the top 1
No,
here?
it's between 5 and 100 currently on sand data.
So someone within the top 5 essentially made a giant swing on their non-exchange wallets here. So something.
And you know what? Just now, I mean, another token, another channel, and it looks like there've been similar patterns, big accumulations. This time in Maker. Yeah. So now someone is in a buying spree. Someone with clearly a lot of money buying into quite some established decentralized projects, be it Ethereum or Maker. Well, you could expect it will keep happening in different projects.
Yeah, I want to show Maker really quick. Because if you guys are tracking the charts over the past hour or so, Maker has exploded. It's up about 38% in the last hour, which is obviously atypical for any project. So over the past week, we see an explosion in daily active addresses. We see social volume is just ignoring this completely. Maker, for whatever reason, just does not get a lot of social volume, probably due to its association with DAI as a stable coin. People may think it's just a little bit boring, but regardless, we had a huge spike in social volume here that didn't really move anything yesterday. But today, despite this spike, the crowd has not picked up on this yet, which means there still could be room to run. And if we zoom out a little bit to 3 months, we can see that trading volume was more or less being flat, social volume was being fairly flat, and daily active addresses, let me make it a little easier to see, daily active addresses was actually declining up until today. So yeah, this one, I think it needs a little bit of time to run because the spike just started about an hour ago. But if you want to keep tabs on whether there's a good buy opportunity on a dip in Maker that may happen later today, or a good sell opportunity as you see social volumes start to pick up on it, I would advise keeping a close eye on what Maker's chart looks like.
Hey, Brian,
Moving over to
here.
yeah.
Yeah, exactly. You read my mind. I just wanted to say while you're in Sandbase, it might be good to go over Chainlink because one of the questions that we got for today's session was examining a few spikes recently that happened with Chainlink. But before that, yeah, maybe you can show us what's been going on with Chainlink recently, maybe within the last week or so.
Okay,
sure,
and just to explain that from our pro users on platform, yeah, we give them this additional service. They can ask us specific questions, and one of the questions was for today, like Chainlink. So this we're giving back to the community.
Yeah, I mentioned it at the start of the call. Essentially, anybody that has a Sandbase Pro subscription will from now on be able to ask us questions that they want us to cover during these weekly calls. So yeah, if you have questions, we'll reach out to you a day in advance, and you can ask us anything you want, and we'll try to answer to the best of our abilities during one of these calls. So go ahead, Brian.
Alrighty. So we have three different metrics here that we're showing. I'm going to start with daily active addresses. And what we've seen over the past month was kind of a roller coaster ride. And we saw that our daily active addresses, which are the amount of unique addresses transacting on a network on a given day, we saw them move up to about a high of 4,800, 4,900 on May 10th, followed by a steep decline. And this actually was kind of a lagging indicator because the price topped the day before, and then we actually had a rise in DAA as the price was falling. So because we're looking at a little less granular, the price probably dropped throughout this day as DAA was still high. And then we saw a decline, a little mini spike here on May 19th as prices approached the same levels that it almost hit on May, that it did hit on May 9th, it almost hit on May 20th. And then DAA has mostly declined since then. So over the past 9 days, with a little bit of volatility, it's mostly just dropped, despite the fact that price has risen again. And then we see yesterday, there was a huge spike in social volume illustrated by this blue bar. This blue bar likely indicated an upcoming top, and it basically happened just a few hours afterwards. And since that time, it looks like it's trying to rebound, despite the fact that DAA really is not there right now. From what I've seen, I'll try to make it a little more granular to see how this looks. From what I've seen, obviously today's day is incomplete, so you can't really see the DAA until it's over. But I'm seeing a kind of a low amount so far today, and trading volume is sort of neutral. And generally, the reason I think that this might be a bit of a bearish divergence is because on the long term, we're seeing a bit of a decline on all of these, on the DAA, trading volume, and social volume. They're all going down. You can see social volume here, DAA here. They're all kind of just starting to nudge downward right now, despite the fact that the price, illustrated here, is moving, it's kind of edging upward, and it's up at about $4 right now. So this could be a bit of a psychological barrier as well. Maybe a lot of people were looking to sell around $4, and based on this, I'm not seeing quite enough support for it to continue surging toward $5, for example. And for those people who are big fans of Link, and I know that us here at Santiment are as well, this by no means that we're suddenly going to call this a bearish project on the mid or long term. But on the short term, this is a prime example of something that we could see indicating a local top, a good time to profit take with kind of a wait and see approach thereafter to see where things look in a week to a month. And there might be some better projects here that don't quite have this bearish divergence going.
Hey, Brian. Can
So
you look
yeah,
at the exchange inflow for Chainlink, just so we can see, maybe even turn off all of the other ones? I'm interested in the amount of
yeah.
sell pressure, at least being portrayed on chain over the past couple of days. If there was anything to suggest that people were starting to kind of move away from Link as it was approaching the $4 level? No, not really. There was
Yeah.
in April, but yeah, so far we haven't really seen anything in terms of like weak hands starting to move their coins. Actually, if you look at the percentage of total supply on exchanges, I think it's been declining for the last couple of months. It's right below. Yeah, there you go. Yeah, it's been. If you kind of take that one spike on April like 25th out of the equation, the amount of link on exchanges has been in a pretty solid decline over the last 3 months. So usually, at least this can indicate that the sell pressure for a coin is diminishing over time. There's less and less of it on exchanges, which is also fairly significant because there's a less of a supply of a coin being available. So the demand for the remaining coins on exchanges kind of drives up as well, sometimes driving
Right.
the price up as well. So in general, I've seen the percentage of total supply on exchanges decline into rallies quite a few times in the past for altcoins specifically. So I'm not surprised to see, yeah, there you go. I'm not
It's
surprised to
been
see,
going for about 6 months straight.
yeah, in general, I think Chainlink holders are pretty loyal to the project, especially like if you look at the biggest top 100 addresses holding Chainlink. I look at it quite often, and I have yet to see them start selling off at any of these points. They're just accumulating and holding their bags. So yeah, for now at least, in terms of the sell pressure, we're not seeing anything too dramatic that would indicate that people are starting to flee from the coin.
Yeah, and it's also worth noting that the long short MVRV long short difference has been well above zero for quite some time. It actually crossed right here at zero back on September of 2019. Went negative. Okay, so here's where it went positive. So mid-November, November 13th, it started to go above. Went a little bit below. Yeah, so it's been positive for about at least 3 months or so, since mid-February, technically, after doing a little bit of fluctuating between November and February. And the reason this is significant is because most other projects right now, at least within the top 50 projects, are still in the negative. Bitcoin is a little in the negative, Ethereum is in the negative, and Chainlink, and I think a few others like Kyber Network, that's another one that's in the positive. And this is another bearish sign that it needs to get a little bit of a correction, or at least have it some traders, sell off at the bottom somewhere, or even just a very short-term local bottom, in order to even out and get us under zero again, because MVRVs from the long short differ perspective tend to hover right around zero, and this has been one of the highest, which is generally bearish.
Okay, while we're on the Chainlink topic, let me share my screen and try to address the question that the user had in terms of figuring out what exactly led to these spikes recently in Chainlink. So I was looking at it briefly before the call, so um, I'm not sure exactly how deep we are going to be able to get into it during the call. But here's what I've kind of noticed so far. So there were two, I think, spikes that he was particularly interested in. Sorry. Can you
I'm
see my
still
screen?
here.
Yeah.
Yep.
Okay. Let's just have it load. And so I'll show you. Yeah. So if we look at exchange inflow, let's look at the last 3 months. Yeah, so I think he was interested in this big spike here, and then there was another sort of interesting spike in token age consumed here. But if you look at the exchange inflow, there hasn't been a correlating spike. So this is, it doesn't seem to have come from a personal wallet and entered exchange wallet. It seems to have just been in a different event. So I was actually, let's first look at this one because I think it's a bit easier to explain, because if you look at the transaction volume as well, let's see, you'll see a big spike. Yeah, you'll see it's like the biggest amount of transaction volume for Chainlink, even including the Black Thursday dump. So it's a massive event, right? It's been what, 19 million in transaction volume. It's quite high if you like understand exactly how what the price of a link is. So I was looking at it, the way that you can do this with sand data. Uh, is we have these charts in Sandata. They're currently not available on Sandbase, so you would need a Sandata subscription to really go this granular, but we will likely port it to Sandbase at some point in the future. So one thing that you can do is you can select a specific coin. And so, for example, I'm looking at the last 30 days for Chainlink. And so let's say I'm interested in this particular spike in transaction volume and token edge consumed, right? So what I can do is I can zoom in on this particular period. And the beauty of this dashboard is that right here, you will get the top transfers for Link that have been going on during this specific period. And you can filter by the biggest amount, and you will see one transaction kind of hovers or towers above all else. By the way, if you zoom in or zoom out, these will change. This is a dynamic dashboard. So for example, if I look at the last 30 days, you'll see some of these change, but the biggest transaction is still this one. So whoever this was the guy that was in charge of this spike in transaction volume. Basically, it was 15 out of 17 million that were transferred on this day, and it was likely, due to this spike in the tokenage consumed, or it was likely the contributor. And sure enough, it's actually not that interesting. It's just Binance. It's Binance moving 60 million Chainlink, or sorry, $60 million in Chainlink from one of their addresses to another. So I see Binance do this quite often for a lot of different altcoins, usually not this strong of or this high amounts. Usually it's like a few $1 million worth of the coins. They move them from like cold storage to hot storage or vice versa. And you can't really, like, I really tried for both Chainlink and other coins that I looked into this specific phenomenon. I tried to pinpoint the impact that these transactions have on the price, and it doesn't really seem like they usually do. It's just really like internal wallet management for Binance. So, and even if you look at here, like, yes, there was a small sort of price incline afterwards, but I would not really put it to this particular transaction. Maybe somebody was looking at the charts and was seeing this massive spike in transaction volume and so decided to buy and drive price upward. That could have been one explanation, but in general, this particular spike is just explained by internal Binance, wallet management or address management. Now, the other spike is a bit more interesting. It's this one, right? This massive spike in exchange inflow as Chainlink was kind of approaching $3.8 level and led to this short-term correction. So let's go back. What is the date? It's April 25th. So I need a higher time frame or a longer time frame. This is the spike in question. So I look at April 25th, and I need to figure out. So because I went through these. So the first one you'll notice is, I think, once again Binance. There you go. It's Binance doing these things quite often. I think the biggest exchange inflow was this particular guy. Yeah, there we go. So these are all irrelevant or Binance related. Or they didn't go to exchanges. This was the biggest single inflow of coins to exchanges at this particular time. So I would not be surprised if this was the kind of culprit behind the inflow. So he sent 600,000 Chainlink. At that point, it was about $2.5 million to Binance in a single transaction. So if you look at the sender address, I'll show you a cool nifty thing that you can do by examining the transactions in Etherscan and how you can connect it to what's been going on Sandbase. So the transaction in question is, I think, this one, right? Let's actually see. So 600. When was it? It was how many days ago? It was 34 days ago. So yeah, it was this one. So it went from this address out to Binance, 600,000. And so you can see that before that, the guy basically got a bunch of coins from BitMax and Huobi in the days and a few days leading up to this massive exodus. So he started basically adding most of the coins that he sent over the past couple of days from a variety of different exchanges, and then in one fell swoop, he sent it to Binance. So one thing that you can do is you can copy this address and you go to Labs, historical balance, and when you paste, this is on Sandbase, when you paste the address here, you can actually see what the historical holdings of this address were for Chainlink. And actually, to me, this looks like just arbitrage. So if you look at the guy, he actually bought most of, or this address got most of its coins a few days before the dump. And if, as you can see here, most of those coins actually, where are you? What was the transaction? It's this one, right? Most of those coins came from other exchanges. They came from Huobi and they came from BitMax, right? So I wouldn't be surprised if this was just somebody trying to take advantage of arbitrage opportunities. So there was like 4 transactions from BitMax, 1 from Huobi, and then so these are the transactions coming in from different exchanges, and then in one sort of move, he sent all of it to Binance. So this isn't really an added pressure to the price, which is why I don't think it was successful. Like if this was just 500 or 600,000 new Chainlink coming to exchanges, this would be a massive sell pressure, and I would not be surprised to see a massive sort of decline in the price of Chainlink right afterwards. But instead, really, if you look at it and you analyze it deeper, you'll notice that this is just one guy moving coins to a deposit address first from different exchanges, and then probably moving to Binance because he spotted some nice arbitrage opportunities. And therefore, it's just the same kind of coins that were already in action, so there wasn't any additional sell pressure put on the market. And yeah, this is as far as I got in terms of, I love digging deeper into this stuff, so I might find some other sort of interesting points about this in the next couple of days, and I'll be sure to kind of tell our user what we were able to find. But so far, the spike in tokenage consumed that happened around here was just Binance messing around with their internal stashes, and then the spike in exchange inflow that came here was most likely somebody just looking for a good arbitrage opportunity. And since then, this guy has no Chainlink available anymore, so there's not really anything interesting to track about this address at the moment. So that's as far as Chainlink is concerned. Now we got another question that we wanted to answer, right, Max, before we sign off for this session. So I can stop presenting my screen and you can go into the question relating to double bottoms that we received.
Yeah. Well, I think it's too late. I will just shortly mention it, and we can cover it next week, more details. Because if I start sharing,
oh yeah, this is true.
It's another half an hour.
Yeah, it's at least a half an hour. Okay.
Yes. But shortly, it was a very good question from Theo Yu, I think this was the name.
Mm-hmm.
And he was asking about how can we explain or show the behavior of this. A lot of pumps we've been seeing lately for smaller coins, right?
Okay.
That was the question. Yeah, and actually, it's a very nice and correct question, because in the crypto, it is possible, and there are now enough projects who are doing reasonable things. So and it's relatively easy to move the market after some bear market. Yeah, relatively easy to move the price. Yeah, our major assumption is that BTC, it's easier to move than the whole S&P or the whole stock market, and alts, especially smaller alts, it's much easier than to move BTC, and we see it happening over and over again. And for us, it's a major signal for strong or bull market, or let's say risk is on in crypto. And as soon as the risk is on, risk mood is on in the crypto, you will always see pumps in alts. And it looks like a random, but it's not a random. Always there is a initial accumulation by some big players, sometimes remove of supply from exchanges, then pump and soft gradual smart exit. Yeah, and there are some good news. And we could even maybe dedicate next week like 20 minutes. I think we've gathered in the last 2 weeks 6 or 7 examples of such smart players, how they do it. Yeah, there was a series of articles published on Insight covering different coins where exactly this happens. So from behavior point of view, this is a normal. Smart players see opportunity, they size it, and they earn the 50, 100, 150%. And as the crypto market is reward the smartest, it will always happen, yeah. And it's very interesting once we start looking at the chart how you could potentially identify it, even not being this big whale holder, but you could identify substance going on. And especially using sentiment, we've seen it very nicely. You can use exit points. This is the most important part, yeah. But let's take it as a 20 minutes talk. We can take it as a topic.
Yeah, I think
either
it's an
me or
interesting
Dina, we
topic,
can cover it with 3 or 4 projects.
Exactly.
It will be very interesting, yeah.
Let's expand on that next week, because you're right, we're
Yes,
already an hour in, so I'm just going to sign us off for this session.
Yes.
Guys, thank you everyone for joining us either live or watching this as a recording. Once again, if you liked anything that you saw or heard during this video, everything that you saw is available on santiment.net. So check it out. For $49 a month, you can get access to Sandbase Pro and all of the templates that Brian has shown today, as well as a number of different indicators that we have went over for Chainlink, Bitcoin, and Ethereum. And if you want access to Sand data as well, it's a bit pricier, but there's a number of different interesting indicators, additional indicators, some of which we have shown today, like the top transfers, as well as the number of addresses holding more than an X amount of coins. But either way, if you want to talk to us about this type of topics on a daily basis, join our Discord. The link is going to be in the description of this video. We talk about this stuff in our trading channels with our community members on a daily basis. So there's no reason for you to wait for next Friday if you want to know why was there a spike in Chainlink social volume or exchange volume or any sort of topics like that. We cover them on a daily basis on our trading channels. So with that in mind, I would like just to thank once again Brian and Max for joining me on this call. Thank you guys for your contributions, and to everybody listening, I'll see you all again in 7 days.
Yeah. Thanks, guys. Have a good one.
Thank you, guys.
Thanks. To the next week. Yeah. Bye. Bye.